We're back. Good morning, folks. It's like I haven't seen you in a few hours. We got another interesting day ahead of us. You know, it's crazy. Yesterday, I did a live stream. We live streamed for 9 hours yesterday. We did a 2-hour live stream for the SoFi earnings release. We did a 2-hour, hour and 45 live stream on the Open Wallets podcast. Shout out to you guys. I saw many of you there. Then we did a 5-hour live stream yesterday where we covered what earnings were yesterday? Microsoft, Meta, Robinhood, FOMC. Right? That's how we get these days with them. Yeah, we did everything. 9-hour live stream. I fell asleep pretty dang early. And now we're back. And we have another big day ahead of us. We have PCE data coming in about approximately 7 minutes. I think that's going to have a decent influence on the market, and I'll talk about that in a second here. We have Microsoft. Microsoft's looking good today, dude. Microsoft's looking good today, dude. Let's go check out our buddy, our pal, our friend, Microsoft. Currently up at $428. My word. What a run it's been on. Up to $428 from the time that earnings report released, or since the earnings call to now, up 10%. Our little goodie bag of Microsoft is looking pretty damn juicy. As you all know, we've been building into this Microsoft position for about a week or so. Microsoft position's up about $200, a 10.78% gain in a week is not bad. I'll take a $200 gain in 1 week for sure. Wish I'd have bought more. I should have full ported Microsoft. But you live and you learn. Don't you? But yeah, we got that going on. We got some Iran news. I don't know if you guys have been paying attention to this situation. We got some Iran news earlier this morning, but interestingly enough, oil prices are still down on the day. Oil prices have not shot back up in response, so it doesn't seem like the market cares. So that's pretty dang interesting. We got that. So we're going to go through all of that. That should take us right into market open. I'm going to do a little bit of market open analysis for you all. We're not going to get too deep into the analysis today, but we will do a little bit for sure. And then later today, of course, we have Amazon and Apple earnings. And you know me, folks. Come on, man. You know me. Shout out to Future Investing, by the way. You know I'm going to be live for that. Already got it scheduled, folks. We're going to be live for that bad boy. You guys have been showing hella love on all of the live streams. I've genuinely felt it. So thank y'all so much. But yeah, we're going to get into it today. Got a bit of an interesting day today. So let's start off with the thing that we have coming up here. Yeah, we're going to talk about a little SoFi as well. Thank you, Cryptics, for that reminder. We're going to talk about SoFi. I am going to be scooping up more SoFi today, I believe. Maybe. We'll see how its price handles this. I did buy $1,000 at $15.20. I did want to buy more Robinhood today. We'll kind of see. There's a piece of me that kind of hopes Robinhood does dip into market open. I would like to scoop more Robinhood. I'll probably toss in about $2,000 maybe, $2,000 into the Robinhood bag. A big increase here. I'm right around my average cost. Happy to increase. I was very happy with their earnings call yesterday. They had a little bit of stuff in there that maybe wasn't the best, right? We got a little information from them. You know, their spending has gone up a little bit, but I do think it's positioning. I think it's positioning. I think they're building out all these new apps. They're building out all these new services. I think it makes perfect sense as to why they're spending so much, especially when it comes to the credit side. I think these are upfront investments. I'm not sure these are recurring, repeated investments. Yeah. Yep. Well, yeah. So we'll talk about Robinhood. We'll talk about SoFi. Man, we're going to go through all of it today. You guys know me. We're also going to talk about semis. Semis giving us a little bit of a rebound today. We got NVIDIA bouncing off of its buyer zone, currently at $193. Not sure if it's going to last, but hopefully it does. We got Micron pushing back up to 767. You remember that little long trade we opened yesterday? It's not looking too bad. We're back in the positive on this bad boy. We're up 18%, folks. I don't think I've ever been this rich in my entire life. 25 cents now. So yeah, this is officially the richest I've ever been in my entire life. Up 30 cents now. Net worth is growing at exponential rates. So we'll talk about Micron. We'll also jump into the Sandisk buddy as well. Little Sandisk trade is currently up. You guys know that I like to open these little $100 long trades in pray to the heavens that they either hit my breakout target or I get liquidated. That's the game I play. It's a stupid one, but it's fun. So we'll talk about those bad boys. We'll look at AMD as well. AMD's trying to give us a little bit of a run. Not super convinced quite yet. Obviously, there's a lot of room to work. There's a lot that needs to happen still before we can get too excited about AMD, Micron, all of these. So we'll go into that. We have a good bit to get into today. I am kind of regretting not opening up that long trade on SK Hynix. I will say that. You remember we were on the live stream yesterday and it was like $121. And ooh, we'd be up about 24% on that bad boy had I done it. Kind of regretting it, but who cares? So a good bit to get into today, man. Look at everybody in here this morning. Did you get Starbies? Nah, I can't get it too early. I feel like that's going to mess up my energy levels. I don't know why. But look at everyone in here this morning. Look at everyone in here. We got Polly Story in here. This is the energy I like to hear. Let's see. Yes, I do agree with this. Shout out to our friend Capt Mart. We got Polly Story again. Cryptics coming in. Toyo, I know who that is. I pieced together who you are. MC. Victor, Will, Naeem. Look at Green D in the building. We got Eugene, Brendan. Look at all the friends. Look at the printed brick in here. That's my favorite profile picture of anyone who I've seen in the live stream chat. If I had to guess, you're my pal who has the fellow blue and purple room. Very good with context clues. AMD is never going back to $550 again. Hey, Shark, I will bet you $100,000 that AMD goes back to $550 one day. Let's say within 10 years. You said never. Okay? You said never. I'm willing to put $100,000 on the line that says AMD within, including splits, pre-split calculations, by the way, if they do one, $100,000 that within the next 10 years, AMD's back at $550. No problem. I'm just joking, obviously. I'm not being an asshole. I know it's going to be hard to convince him to. Yeah, you bet, folks. All right, well, look, we got PCE data coming in a second here. Let's get into it then, folks. PCE data is simply just the inflation metric. It's the inflation metric that the Federal Reserve previously used to really like to look at. Kevin Warsh said that it's not potentially their preferred metric anymore. He's being very cryptic and the market hates it. So you never know if it's the number that they're going to truly base everything off of. Another thing is, not only is PCE data maybe not as important now because he kind of said they might not be, but also the PCE data that we're going to get is going to reflect inflation data from June. But what you have to consider is that from June to now, things are just different. You know what I mean? Like if we go look back at where we were in terms of inflation in June, we were seeing inflation really falling. So this number that we get today is not going to represent the modern day well whatsoever. Okay. And I just don't think the market cares too much about it. But I think there are context clues that will be buried in it that are worth paying attention to. Now, it should be releasing in a second here. Expectations are 3.3%. Anything below that will generally be considered bullish, but I don't think it'll be very important because, again, it's outdated. Anything over 3.3% actually could be taken quite bearishly just because people will say, well, if inflation was coming, if inflation was coming in higher than expected before oil got bad, what's it going to be now, right? So there could be a bit of a response like that. It's going to be worth paying very close attention to, okay? So we're going to go look. Bureau of Economic Analysis. Let's see. Here we go. Wait, is it the... Hold on. Yeah. Let's see here. When did you get released? Here we go. Embargoed until release at 8:30 a.m. No, this is not what I'm looking for. Go away. There we go. Okay. In the preceding month, the prices index from the same month ago, PCE, including the PCE index increased 3.3% from a year ago. Okay. Came in at expectations. Came in at expectations, which is totally fine. Double check myself there. It's core PCE. Yeah, that's what everyone cares about. All right. PCE price index comes in at 3.7%. Expectations at 3.7%. Core PCE came in at 3.3%. Expectations were 3.3%. Yep. Cool deal, man. Got exactly what the market was pricing in. I don't know what Ash is talking about. Expectations, I didn't see expectations at 4.1. I saw 3.7 and 3.3. Yeah. 3.7 and 3.3 is what I saw. Ash is usually on point. I don't know why Ash said 4.1. That's weird. This is what I saw. Okay, let's just go. Walter, don't miss. Look at that profile picture, dude. Look at that profile picture, dude. You can't make mistakes looking like that. U.S. June PCE price index falls 0.1% month over month. Estimates expected 0.1. That puts U.S. June PCE price index rising at 3.7% year over year. Estimates at 3.7%. Core PCE price index rises 3.3% year over year. Estimates at 3.3%. So, yeah, estimates came in exactly as expected. So I don't really think this is going to have a major impact. It's basically one of those situations where it's not. Wait, what? If you have to bet $100, will you bet for AMD? No. You said never, so I thought it was an easy bet. What was I about to say? So with this PCE data that we just got, let me actually update the timestamps on this live stream, by the way. Where are we at right now? Let's do it. Okay. By the way, guys, I've been trying to go in and add the timestamps into the live stream so you guys can always click around, okay? So we just got PCE data releasing. PCE data just came out for the U.S. in June. Analysts were expecting it to rise 3.7%. It rose 3.7%. Analysts were expecting core PCE price data to come in at 0.1% month over month, and that is what we got. 3.3% year over year, 3.3% year over year from estimates. So PCE data came in exactly as expected. Again, if you don't know what PCE data is the inflation metric that the Federal Reserve historically has preferred to use. Now, there are caveats there. Kevin Warsh did recently say that the Federal Reserve was going to lean maybe a bit away from PCE data, and they were going to look at other metrics, especially those gathered by the new task force, which was just another way for them to add a little bit more smoke to the mirrors, right? They wanted to make it a little bit less transparent. So the market could basically get no read ever at any given point of what the Fed could potentially be thinking. And their thought process is that the market will automatically adjust itself. You know, they referred to the fact that interest rates had rose, the market increased interest rates on its own. If you look at, the treasury yields and et cetera, and things of that nature, without the Federal Reserve needing to step in. What they're trying to do is let the market kind of handle itself a little bit. That's their goal, at least. That's what they're seemingly trying to do. And so, of course, that is why he went on that little thing, like, maybe PCE isn't really what we look at. But nonetheless, it is a great representation of kind of what's going on in terms of inflation and how prices are rising. Now, there's another caveat whenever it comes to this PCE data specifically. And this is June PCE data. Okay, so this is inflation data from June. The problem with that is if you go look back to June and see what was going on in June, we saw, of course, oil prices falling. Oil fell from $97 a barrel to $71 a barrel. We actually saw it bottom at $73 a barrel for Brent crude oil. And the reason why that's important to think about is because if oil prices were falling in June, it means that inflation would have been mechanically lower in June. Prices in general, especially energy prices, gas prices, and all of the direct and indirect impacted sectors because of oil would have been lower. So it's not a super accurate representation of what's going on in the modern day as a result of elevated oil prices. Now, something to consider is the fact that right now, heading into, August, we are seeing oil prices kind of right around this midway point of like where we were about halfway through June. So it is one of those things where you might go, it might be in a similar position right now. So it's worth paying attention to. But remember, this is outdated information. PCE data is very outdated, right? It's always a month behind. So when you're in a big situation like the Iran conflict, like we're in right now, and oil prices are all over the place, maybe the market's going to respond a little bit less to it. It's not going to care as much. And so all in all, PCE data now isn't as important as PCE data used to be, but I do think it's definitely worth watching because it'll still give you insights and clues as to what's going on in the economy. And the good part about this is the good sign that we're getting from this is the fact that although it is a bit outdated, it tells you that even last month, inflation wasn't out of control. The worry that everyone has is that inflation was out of control and that inflation was climbing mechanically behind the scenes and that the Fed was going to have to step in and they were going to have to start raising interest rates to combat this inflation situation. And that's not particularly what we're seeing, right? If we actually go look back at the previous CPI numbers, inflation was decelerating a little bit quicker than people were expecting. Still going up, but not going up at the rate that people were expecting it to go up. And so, although it's not maybe great news, it does go to show like, okay, even in the month of June, when it comes to inflationary numbers, the data was still not out of control. And it was exactly where analysts thought it was going to be. Now, does that mean that the Fed won't raise interest rates? No, of course they still can later in the year if they want to, especially in the next meetings. The September meeting is one I'm personally eyeing for a potential rate hike. But still, right, this is good news. This would have been bad if it would have come in worse than expected. It would have been bad if we saw, core PCE coming in at 3.4, 3.5%, because people, again, I'm telling you, people would have said, well, if inflation was out of control last month, just think about what's going to happen now that it's going back up. And if this whole Iran conflict doesn't end and oil goes back up to $100 a barrel, they're going to have to raise interest rates. And it's probably going to be 3 cuts, or 3 rate hikes. Like, the narrative would have started to spin because the market wants something to be nervous about. The market wants something to be worried about. It's like desperately looking for something to be worried about because that's the emotional state the market's always in. The market will always cling to negative emotions as soon as physically possible, as soon as mentally possible and humanly possible. And so it's not being fed that today. And I actually do think that's bullish. I think it's bullish for the markets to just not have been fed something negative to grasp onto. So what we can see is that if we do look at how the market's holding up today, it's not holding up bad. We just got this PCE data. We just got that information back, and look, the S&P 500 is holding up. It's pulling back a little bit. It doesn't matter. That's a little bitty pullback. And if you also go look at things like, oil prices are, still sideways. If you go look at some of your high beta plays, Micron is pumping right now. Sandisk is pumping is a very loose term, by the way. They're recovering right now. We have AMD recovering right now, SK Hynix as well. You got Broadcom. If we zoom out of the AI sector, you have SoFi still trying to find a bottom here. You have Robinhood still trying to find a bit of a bottom here. You have financial services performing exceptionally well with MasterCard currently at $579. You have American Express still doing decent, but it does look like it's going to break out of that structure sometime today. We have our hyperscalers. Meta still trending down. That's a whole topic for a whole nother day. We have Microsoft still maintaining some of its gains pretty well. You have Google pulling back a little bit as I think people are rotating into Microsoft this morning. I'll talk about that later. And people holding up decently for Amazon as they're positioning for Amazon and Apple's earnings today. So all in all, the market is digesting this news very, very well. And I think that is reasonably so. Now, it is pretty interesting to kind of see how things have gone. How things have gone in the past. Let's kind of see how the market has responded to PCE releases. And shout out to Astra Insights. They always drop some cool stuff for us. They always give us some cool charts to look at, okay? So when we look at 223 of you in here this morning, shout out to all of you. Shout out to all of you, by the way. Hey, I have one thing I want to ask you. If you are enjoying it, if you hit that like button, it's going to send this video out and this live stream out to more people, and they'll come in, they'll watch. And that's just great for the channel, and I would appreciate it a lot. So if you're enjoying the content, if you're getting some value, hit that like button real quick. I would really appreciate it. But yeah, let's go ahead and let's look at it. So let's look at the ones that came in at expectations. So we came in at expectations in May. The market was up in pre-market and ended the day in the green. So that's fine. So last month, we started the day in the green. We ended the day in the green. Slightly pulled back from pre-market trading, but ended the day in the green. We pulled back the next day, but went on for the next couple of days, next week or so in the green. So it was good the last time. The time before that, we were negative in the pre-market. Negative in the pre-market, positive into market itself, and then positive throughout the rest of the week. The time before that, when we came in at expectations, we were positive in the pre-market. We pulled back into the end of the day, but we were still mostly positive over the next few days, so a bit of a neutral response there. The time before that was green throughout. The time before that was green throughout. So historically speaking, now to be fair, there's a lot of nuance. There is a lot of nuance to this. Okay. And what was happening at these times and on these days. But all in all, what you can see is that on the days where you just see it come in at expectations, it seems as if the market is responding pretty positively to it. You only really get a super negative move when you miss. You see how like back in July of 2025, expectations came in at 2.5. Actual release was 2.6, went negative for the next following days. That is pretty normal. It's pretty normal for something like that to happen. But, even right here, right, you saw a little bit more red. But the market does seem to favor these sorts of days in which analysts expect one thing, that's what they get, right? Now, they also have expectations sitting here at 3.6%. I don't know why everyone's all over the place with these expectations. Expectations were 3.7%. That was the broad consensus, was 3.7%. We got 3.7%. PCE was 3.3%. We got 3.3%. And so, all in all, although it's not going to be as important this month because of the caveats and the nuances that I mentioned before with what Kevin Warsh said yesterday and with the lagginess of this reading, I do still think that it is in some ways a slightly net positive for the market that we didn't see PCE coming in hotter than expected. Neutral or better is totally fine with me, and that's what we got. And I think it's going to just again ease the nerves of the market a little bit. And that's that's what's been happening over the last few days. It feels like from yesterday going into today, the market has just had its nerves eased a little bit. Right? Think about it. The Fed didn't hike interest rates, which although they did like. It was only a 30% chance they did, but people were acting like it was going to happen. I was like, I don't think so, but we'll see. The Fed didn't hike interest rates. Microsoft didn't raise their 2027 fiscal year CapEx guidance, meaning that the amount that they said they're going to spend next year is just what they're going to spend as of now. They can still raise it, but whatever. So that made the market feel a little bit more secure because one of the biggest players is not continuing to leverage themselves into this bet, right? Risky bet, by the way, them doing that, but I'll talk about that later. PCE data from June came in, and a little is exactly what analysts were expecting. And so it's like all these things start to just make people less nervous, right? It just makes people a little bit less nervous about where we are in the market. And that's what you want to see, because remember, right? I'm pretty damn sure we have to be in fear. Maybe I'm wrong. I'd be shocked if we're not. Yeah, exactly. Right. The market's in fear right now. It's been in fear the whole week. It's been in fear the whole month. Right now, we are trending a little bit upwards from where we were a month ago, but still in general, the market's very fearful. And that's a part of the reason as to why you will see a downtrend like this, right? It's a part of the reason as to why you will see SPY, for example, trending downwards and breaking downwards, coming down off that all-time high. It's the reason why your higher beta plays, why your more individual, riskier plays, like, whether it be a Micron or whether it be a Sandisk or it's an NVIDIA or whatever, it's the reason why they're going to be pulling back. They're tied together, right? It's like, which one came first, the chicken or the egg, right? Was it the sentiment that pushed them down, or was it the pushing them down that changed the sentiment? You don't know. But in these moments in which the market is fearful, nervous, and emotional, you're seeing these sell-offs really get worse and worse, right? That's why you'll enter really harshly into the later portions of these downtrends, is because emotion flips and things get negative. But you see, what ends up happening at some point while you are in these downtrends is that eventually the sentiment stops getting so negative. The people who are going to panic sell, and the emotion starts to flip. Things like what we've seen today and yesterday start to happen that make people go, maybe we're overreacting a little bit. And then you maybe can see the market start to return a little bit. One thing that I also think is contributing to the fact that the market maybe isn't performing so badly today, as of now at least, is the fact that your Kospi actually held up decently well today. For one little bit there, we actually saw the Kospi up to nearly 6,000. We saw that Kospi, the South Korean composite, push up towards 6,000 at one point before coming all the way back down towards 55.76. But a 1.2% pullback on the day is not bad, considering the fact that it's down 20% over the last 5 days. I think this has also brought a little bit of stability to the AI market. I think it's a part of the reason as to why you are seeing something like Micron with a little bit of legs on it this morning, right? You see a Micron back at 783. You see a Sandisk back at 1,096. You see an AMD climbing back up to 453. Not to say it's going to last, and there's still a lot that needs to happen before we can say that they're back. But I do think that it's easing some of the fears that we see in the market right now. And that is, again, a part of the reason as to why what we saw today, whenever it comes to PCE data, is important. It just eases those fears a little bit. And I think it's a good thing. So I'll keep you guys updated, obviously, as we get more data like PCE. But yeah, I think it's a net positive. Okay, let's talk a little bit. Let's do a bit of a recap from yesterday. I know not all of you were here yesterday. Let me give you a bit of a recap of what all happened yesterday, especially when it comes to some of our favorite players. Okay. I had the timestamp in. There we go. So let's do a bit of a recap. All right. So a couple things to discuss, actually. A couple things to discuss. And then we're going to get into the news after this of what happened this morning. And we'll start because we'll be getting closer to the market opening at that point. Okay. So let's talk about what happened yesterday. A lot of stuff. Let's go bottom to top. All right. SoFi. SoFi released a stellar earnings report. Record revenue. Let me go show you. Hold on. I mean, this was an A+ to me. This was just about as good as it could get. So SoFi released a record-breaking Q2 earnings report yesterday. Qualcomm's off. So this was not their revenue. Their revenue that's also not their revenue from quarter one. Damn, Qualcomm's all the way off. That's crazy. That's weird. They're not usually off. Yeah, that sucks. Wow. Weird. They're not usually this far. They're very off here. Anyway, well, I'll just tell you then. So SoFi came in record-breaking quarter. Margins were great. Revenue came in higher than ever. Accounts higher than ever. Brand building, more successful, highest conversions ever. I mean, across the board, literally, they just smashed everything out the water. And the market didn't really reward them. The market didn't really reward them. And the reason why the market didn't reward them is because they weren't expecting their net income, especially for the rest of the year, to continue to climb. They're like, yeah, about what our net income is what we're expecting it to be seems about right? But because you got to think about the way in which the market is desensitized to everything right now. Everyone's looking at all of these different stocks in the market as if they're AI stocks and saying, what? You're not increasing your net income guidance by 10, 15, 20% over the next 6 months? Oh, you're a piece of crap stock, dude. Not good. I don't want that piece of crap. Right. And that's literally the way that the market's treating any single stock, any single company that doesn't report a crazy growth in guidance. When people don't realize, like, they're already guiding increased profit this year. They're already guiding increase. It's just not compounding. But that's not the way the world works. You don't just see all of these companies in the market constantly just like exponentially growing throughout the year. That's not how this works, right? But it's the way the market is pressured right now. It's the coiled up effect that this market has because it is so emotional, and it's going to take time to unwind that. It's going to take some time to unwind that a little bit, and that's why you are going to see a SoFi maybe not performing so well yesterday, because people look at it like it's a boring company. They don't see anything super exciting about it. They're not really scaling super crazy. They're not growing super crazy, not on AI levels. And it's people have the mindset of like, why would I buy SoFi when I could buy these other things? That's the way they look at it. Why would I buy a SoFi right now that's not expecting to continue to exponentially scale their net income when I could go buy a Micron, for example, who has hundreds of billions of dollars in commitments and there's endless upside? It's a fair point. I just don't think it's a great point, personally speaking. There's another way that people look at it. Another reason as to why people say, I'm not really with the SoFi thing right now. And this also applies to other fintech, is because people are concerned and expecting that some sort of rate hike is on the way. And you have to understand, SoFi as a company will not perform at its best in an environment in which rates are being hiked. And right now, even if the Fed isn't increasing rates, we are seeing the market moving rates up. Look at the 10-year. Look at yields, right? Rates are increasing one way or another. Okay. And so what you have to understand is that in an environment in which rates are going up, a company like SoFi, they get hit across the board. Their technology platform, which is more of a high beta, business within their platform, tech doesn't perform well in a more economically constrained environment. It's why tech companies don't usually do well when you see rate hikes happening, right? When you also look at the transaction revenue, okay, whenever you look at the transaction revenue that they're going to make from, say, crypto, random example. Investor, in a moment like this where the market's pulling back and there's people are expecting rates to be hiked, naturally people are feeling a little bit more risk off. So they're not trading as much, they're not investing as much, so they're not making as much on their transaction fees. Loans and loan originations. What you have to understand is that as rates go up, right, and as it becomes more expensive to access capital, people are less interested in it. People don't want loans as much. They're not as willing to take out a loan, whether it be mortgage, whether it be personal, because they don't want to pay all the interest. Some people just can't afford it, right? And so what happens is that in these moments in which these rates are climbing, companies like SoFi, not that they perform bad, they just don't perform at their best. They can't be at their best because it's not the right environment. The best period for SoFi is interest rate Goldilocks period, where interest rates start the first 1, 2, 3, first 1, 2, 3 interest rate cuts, right? When you see the Fed start cutting rates or interest rates start coming down, that's the best period for SoFi. Why? Because think about the mindset. People who've been locked into these big, expensive interest rates and people who've been locked into these loans for a long time, they're going to look at these rates coming down and say, ooh, you know what? I've been thinking about refinancing. I've been, man, finally this house, my note's so high, I can refinance it and save a couple $100 a month. That's how people feel. That's what people think. And so they go to a platform like SoFi and they're refinancing and they're taking out loans and they're spending more money and they're investing money because they're feeling better and they're making more money here. And then other companies are experiencing it as well. And so then they're capable of, generating more revenue from Galileo, their technology platform. That's where SoFi shines. People don't see that future yet. People aren't looking at the US economy and looking at the market and saying, SoFi is about to have some sort of massive, we're about to see interest rates get cut over the next few months, over the next few weeks, and that's going to be huge for SoFi. People can't envision that. People don't know when. That might not be until the end of next year, realistic. And that's fair. It might not be. And so people then go, why would I buy SoFi if it's not going to enter into its more conducive, an environment that's conducive for growth until next year, when I could buy these other things that are scaling now, that are growing now? It's a fair argument. I don't like, what's the word that I'm looking for? I don't blame them. I don't know why I can think of that. I don't blame people for feeling that way. I think it's totally fair. That's just not the way that I play the game. If I see something that I think is a lock, if I look at SoFi and I say they're literally telling us that their ROTCE could be, like the return on tangible common equity, could be 20 to 30% tangibly, easily, and probably within the next 12 months. If I do see a world where rate cuts can happen, if I see a world where the crypto bull market sparks off and they did $131 million in revenue from their crypto platform, only like $1 million of that was profit, but still, like, if I can see a world in which they're going to generate revenue from that and drive a multiple from their crypto platform and their tech platform, but it's going to take 12 to 16 to 24 months, I'm willing to just buy over 12 months and wait. I'm not going to go, oh, I'll buy SoFi in 8 months, because I'm not confident in myself to time the market like that. I don't have that sort of confidence as an investor. I've been investing for 9 years. Now, I've not been full-time investing for 9 years, right? But I've been in this market for 9 years. And what I've come to realize is that, like, the longer I've been in the market, we talked about this yesterday, the more I've come to realize that I am not a perfect investor. I'm not naive enough to believe I can perfectly time everything. I'm not naive enough to believe I can time tops and bottoms. I get close sometimes, right? I'll get close because of my technical analysis, but almost anything can happen, right? Almost anything can happen, especially now that we have a Fed who doesn't give us really any insight into what they're going to do. They might just surprise rate cut you one day in a year or 2 years. And then you're kind of too late for the best opportunities, right? So I would rather be scooping a SoFi in the depth of the bear market for them rather than trying to come back and time it. I just don't trust myself to do that. And if that makes it sound like I'm not a good investor, it means you're still early enough in your stock journey to be naive enough to believe that you will consistently time the market tops and bottoms. You won't. You'll maybe get close, but you won't time them perfectly. Almost no one will. Because if people could, this whole landscape would be different. You know what I mean? And so when I look at something like SoFi, it makes me go, yeah, I'm buying that. Yeah, I'm buying that in these sorts of moments. And so that's why yesterday I deployed $1,000 into my position. I deployed $1,000. As you can see here, I bought $1,000. Where is it? There we go. I bought $1,000 of SoFi at $15.20. We're currently sitting at $15.42. If it does come back down below $15 again, if it dips into like the 14 territory, like it did fall into the 14s. That's so weird. I remember seeing it at 14. Hold on. Maybe it's just Robinhood. Yeah. Okay. You see, like we came down to $14.90 at one point. I was about to say, I know for certain I saw it fall. Oh, the market wasn't open yet. Anyway, if we see it dipping into the 14s, I am going to buy. The only thing that concerns me that makes me go, we might not dip that low is, or, maybe we'll just brush it, is because SoFi does have a history of crashing, recovering, trickling, then breaking back upwards. That's kind of how SoFi responds almost every single time. And it makes me go, damn. Like we may already be getting close to like trickling and then starting to pump. So we might not get that opportunity. SoFi honestly might not fall below the green box like I thought it might here. You know, I warned you all like, hey, you need to be careful. It could easily fall through this. I think the buyers could potentially hold this up. Only time will tell. We need to kind of see how the next few days go. But let's say hypothetically SoFi does start to roll over and we see it pulling into, you know, the 14s, I'm going to be buying. Sell the house to buy more zone. That's what I'm doing. Sell the wife to buy more zone. So like, I'll just casually be buying right here. If we go between 14 and 11, this is when, you know, putting the house for sale. I'm obviously joking, guys. Please don't sue me. Joke continues. Putting the house for sale, buying more there. And yeah, I mean, my beautiful, amazing wife who makes my life amazing. Yes, she just got to go. I need more SoFi. I'm sorry. Got to go. What can I say? Got to go. Got to buy more SoFi. I don't know what to tell you. I'll get you back. When SoFi bounces back up to $30, yep, I'll come get you back. Okay. So with that in mind, that's kind of where I am with SoFi. But all in all, I'm going against the grain. SoFi's down. People are scared of it. I am not. I am so damn bullish on SoFi. You can't understand it, guys. You can't understand. Like I think it's just, it feels like a lock to me, bro. It feels like a lock. I can see a world in which it capitulates. I could see a world in which, you know, say the bear market continues to get worse. They're hiking interest rates worse than expected. You know, there is a world in which SoFi comes below $10 again. I don't think it's super likely. I could see that world. I just don't care. I'm just in a spot where I'm like, I'm so confident that SoFi is going to bottom somewhere in these zones that to me, it's like, I'll happily buy 10 grand here, 10 grand here, and 10 grand here and build this into a $30,000 position because I can just see it. I can see them driving that multiple. I can see them driving that multiple from their tech and from crypto when the crypto bull market does spin back around, whatever it may be. I'm just my conviction's so high. My conviction's also high with Robinhood to spin around to this fella. My conviction's very high with Robinhood. It's even like as simple as like, so Robinhood's earnings report was good yesterday. Okay. Robinhood's report was good yesterday. Not as good as SoFi in my opinion, because Robinhood's not capital expenditure, sorry. Their expenses in general were just a bit high. Maybe I can pull this up for you. Give me 1 second. No. Here. Okay, so look, like this wasn't great, okay? So like operations, for example, I don't love to see the changes that we're seeing here, right? I don't love to see some of these changes here. It's just, it makes me go, ooh. It makes me go, ooh. You know what I mean? Like, for example, look at how operations go from 29 to 57. That makes me go, ooh. It's a 97% increase, fellas. Nothing really crazy on marketing. But look at G&A. G&A 132 to 199. Total OpEx 550 to 734. It makes me go, ooh. It's not bad. And I'll explain why in a second. It's not bad. It's not the end of the world, but it's like, okay, I'm great to see their revenue climbing 32%. But when OpEx climbs 33%, it makes you go, okay, they're spending a lot of money to make a lot of money, which is great. But you definitely want to see that come under control a little bit. Okay. Like, look, 20% T&D. Totally fine. Even brokerage and transaction, 48 to 62, considering everything that they have going on the brokerage side, fine. 100%, 97% on ops, 51% on G&A. That makes me go, ooh. So if I was going to give, SoFi an A+, I would give them like a B-. I would give Robinhood like a B-, a C+, B-, somewhere in there probably. Just because they're expenses. But the way I look at it with these expenses is like they are heavily investing into themselves right now. They're building out so many different structures. They're building out so many different services. Think about it. They have 13 independent businesses in the Robinhood name that are now generating over $100 million. Insane. That is crazy to think about. That is crazy to think about. Oh, going back to SoFi real quick. One other thing that they're doing right now is they are investing in a very low capital, non-capital intensive, lean businesses that are reducing their profit margins, helping them get that ROTCE, return on tangible common equity, up towards 20, 30% next year. Beautiful move by them. Huge move by them, which is working on that massive loan origination and interest revenue to everything else and balance. It's starting to balance it out a little bit, which I think gives them a more stable multiple. Side tangent, very good for SoFi. Going back to Robinhood, that is crazy. That is crazy, man. The amount of revenue that they're generating from so many different places, it's just insane. And so that's why when I look at a Robinhood, I'm like, man, they're just investing in themselves right now. They're building out all these services, whether it's Robinhood chain, whether it's the Trump accounts, whether it's the wallet, whether it's Robinhood banking, badass app, by the way, super cool. Whether it's all of these things they're doing, they are just reinvesting into themselves. And realistically, Robinhood's in a bear market. Robinhood is a cyclical stock. When the stock market is kind of pulling back a little bit, when the crypto market especially is pulling back, Robinhood is the sort of stock that's not going to perform super great in that environment, right? Robinhood is in a bear market. I know it's up right now, and people are like, Tyler, what are you talking about? No, it's not. Yes, it is. Let's go look at where Robinhood is, right? If we go from our all-time high to where we are right now, Robinhood is currently down 40%. Even when it pumped, it was still down 22%. At the bottom, it was down 60%. And realistically, this pump that we saw was nothing more than a return to golden zone. Robinhood is still clearly in a bear market. And so the fact that what they're doing right now is reinvesting back into the company, building out these services, building out these product lines, reducing their CAC eventually, I think, honestly, I just think they're doing everything right. Even as simple, this is going to be a little bit more of a nuance, but like, even when they did the earnings call, even just like you guys, we listen to a lot of earnings call here on the channel, but even this, like just going on and watching this, it just felt good. Is this just me? Am I the only one who feels this? It just felt good when Vlad is up there and he's showing us around and he's showing us what they're working on and what they're building and the new, like, this just felt so damn good to me. And this is what people my age and people younger than me, or maybe 5 to 10 years older than me, this resonates with us, right? Because you can have, your more traditional businesses who are going to do their earnings calls and they're going to talk, they're going to say a bunch of numbers, they're just going to read the data. And great. Oftentimes, investors who've been in the market for 20, 30 years, that's normal to them. They're going to pick up their phone, they're going to listen to it. That works for them. But people my age, YouTube consumers, live stream watchers, this is what we want. This is what we want to see. This makes me feel good. Dude, I honestly did not want to leave this live stream yesterday to go to the Microsoft one. I just needed to because Microsoft's so important. I didn't want to watch this. And look, the second my stream ended earlier, I went watch this whole thing. I would watch this whole thing and listen to their Q&A. And look, I know. They scammed us in 2021. I know. But I think we just let bygones be bygones because, like, it just felt good. So when I look at a Robinhood and what we got from them yesterday, it makes me feel very positive. Yes, they're spending a lot of money, but they are investing into the business. And do they have a bit of a high multiple? Sure, they have a bit of a high multiple. Sure, they do. They do. But people know how much money they can make from crypto. People know how much money they can make from crypto, and it drives them a higher multiple than most people in the market have. That sort of thing is the exact reason as to why we saw Robinhood, whenever the whole SpaceX situation happened, running. And I'm telling you, when the crypto bull market kicks off, I think Robinhood is going to push $196. I think we are going to see Robinhood push $196 at some point, which is why when I see Robinhood sitting here at 90, it makes me go, there could be a 100% gain coming for Robinhood. It might take 2 years, right? Like it might take 3 years. But think about it. Even if it takes 3 years, 4 years for it to get to $200. I don't think so, but that's 25% a year. That's why when Robinhood, for me, I go, yeah, that feels right. That feels right to me. And it's just a feeling. And so that's why I do hope I am looking for an opportunity to buy Robinhood today. I might just need to buy it. It sucks. It sucks I didn't get to scoop it on the lows. I'll see how it responds when the market opens. But yeah. Do y'all feel me on the Robinhood thing? I'm big in SoFi too. Are you worried they just end up with a bank multiple as the tech angle is kind of drying up? No, because they are heavily they are positioning themselves for future innovation as well. Whether it's crypto, stablecoin, transactions there, even Trump account sort of things is positioning themselves for that. They're also doing the personal loan side of things as well, which I think is great. They're doing a student loan side of things as well. I think that they're like, they probably could have a bit of a bank multiple maybe later down the line, but I still think there's a lot of innovation before then that'll happen. And they're more of a new age company, and new age companies just oftentimes drive higher value multiples. Okay, let's catch up. All right, let's fast forward a little bit. Okay, so that was SoFi, that was Robinhood. Let's go into FOMC. So yesterday we saw the FOMC meeting. Kevin Warsh didn't really give us anything. I don't really know what the point of yesterday's meeting was. It was kind of a nothing burger across the board. It's basically like the markets drove rates up for us. We don't really need to do anything right now. We're going to sit back and watch how all this plays out before we make a move. Most of us agree that we didn't need to raise interest rates. Now, there was a lot of people who were saying, you said that inflation was going to be 2% and that you had zero tolerance for inflation being 2% when you came on as the Fed chairman. So why aren't you making a move right now? And I'm sitting here thinking, hey, there's obviously a conflict in the Middle East right now that is obviously pushing prices up. And when that conflict slowed down a bit and oil prices pulled back in June, CPI came in 3.4 percentage points lower than anyone expected. Inflation started to take care of itself last month when oil pulled back. This is an oil problem. This is not an interest rates are too low problem. So I get it. Kevin Warsh was talking big game. But to me, it's like, isn't it obvious that this is a wait and watch for this Iran conflict to sort itself out before making a move? Because in my opinion, what does it help when you already have inflation or oil prices running because of the Iran conflict to then go in when bond yields are already up anyway, to then start raising interest rates, quantitative tightening the economy even more? I mean, I guess, but that's not why inflation's up. That's not the problem. It's not like people are just spending willy-nilly. I don't know. It's a bit of a weird one for me. It was a bit of a weird one for me. I was a little bit weirded out by that press. I was more weirded out by the people's responses afterwards. And maybe I'm just missing something. But to me, that was a weird one because I oddly agreed with their decision to not do anything. And it seems like everyone, it was weird. It was just a freaking weird thing. Okay. But yeah, so that's what we got with FOMC. The market didn't really care. We got a little pumped and a little dump around the time that FOMC happened. The market really honestly didn't care that much. There wasn't a big result there. Okay. Now, going into the next one. Going into the next thing. Meta earnings, Microsoft earnings. Meta earnings, bad. They were just bad. They were just not good. Okay. Let's break it down. I did shit on them a little bit more than necessary yesterday. So I need to walk it back a little bit. But I was annoyed because in the earnings call, they didn't talk about their capital expenditure almost at all. They just focused on everything else when obviously their CapEx is the reason why their free cash flow is collapsing and is about to go negative. And they just didn't talk. They just didn't talk about it. And it pissed me off. It honestly just pissed me off to the point where I was like, I was a little bit blinded by it. And it just annoyed me to the point where I was just shitting on Meta all day, basically. Here's what happened with Meta. Meta raised their revenue. Meta's revenue did climb. That is true. I think it was like, I can't remember the exact number. I'm not going to guess. It was better than expected, though. Top line. Bottom line was a different story. They missed on EPS by a lot, like $1 or something like a little bit over $1, I think. The reason why they missed on EPS was a mixture of a few things. One, the lawsuit. Two, severance. Okay. 2, severance. 3, CapEx. If they didn't have, this is what annoys me about the narrative that's spinning up about Meta, and I'll talk about it in a second. If they didn't have the lawsuit expenses, was like a couple billion, and severance, Yo, what is that, bro? I'll just do it like this. If they didn't have the lawsuit and the severance, I think they would have beat. Yo, what is okay? I'm just gonna put my hand down, bro. Um, um, shit, it threw me off. Okay, if they didn't have the lawsuit and if they didn't have the severance, I think they would have slightly beat on EPS. Revenue would have came in higher than expected. EPS would have slightly beat. Okay, but let me reword that. Because a lot of people are saying, oh, Meta's fine. Meta's fine. You take away the lawsuit, which is a one-time thing. You take away the severance, which is a one-time thing. Boom, they come in, they beat earnings across the board. Great. Let me reword that. Now, I want you to understand, I don't dislike Meta. I just don't like Meta. I don't care. I'm neutral. Okay. I honestly feel like I have an unbiased perspective on Meta. I use Instagram. I use Facebook. It's not really my thing. Right. Had Meta not gotten sued and been found guilty of implementing somewhat malicious practices to almost intentionally, seemingly is what the lawsuit said, intentionally get teenagers and young adults addicted to social media, they wouldn't have had to pay a lot of money. And if they wouldn't have let go thousands of people, they wouldn't have had to pay all of this money. So had those two things not happened, they would have beat earnings. And I go, is that how we want to look at that? Is that how we want to look at that? Is that how we want to look at that? I don't know. That makes me go, nah. Why would I buy a Meta when I could buy a Microsoft? That's where I end up coming back to. You remember when I said earlier that SoFi, people didn't want to buy SoFi. Like, why buy SoFi when I could buy something else and just come back to SoFi later? That's kind of how I feel about Meta. Why would I buy Meta when I could buy other ones? Now, they did actually, I will say, they did beat revenue. That was good. Good on them. And it does go to show that the CapEx that they're doing right now is having a tangible impact on their top line. That is good. The market definitely didn't like the fact that they raised the floor of their CapEx for the rest of this year, but it wasn't substantial enough that I think people actually cared. I think people just saw the EPS beat or the EPS miss and just it tanked. And that's a part of the reason as to why it's nuking. And yeah, I'm not sure maybe how much further down it goes from here. You know, it is coming back to major zones. You got major support and between 481 and 530. So I think this $50 gap could provide some support. I don't know. Yeah, had you not gotten sued for that thing you did, and had you not laid off a bunch of people and have to pay them severance, you'd have did better this quarter. It's like, yeah, okay, cool. Had I not punched that random stranger in the face and gone to jail, I would have worked those 3 days that I was in jail, and I would have made more money this month. It's like, you know what I mean? So I don't know. Not my thing. I actually do think Meta is a decent company. I don't think Meta is a great stock to buy now. It's like, if you haven't, hold it. I think Meta will figure it out. I mean, we are talking about, at the end of the day, one of the best companies in the world. Be real. One of the best capital allocators in the world. Look what they did with Instagram. And I mean, that was a million years ago, but look what they did with Instagram, right? Meta will be fine. I just think right now it makes me go, You know what I mean? It's just my own perspective. And yeah, and I know some of you own Meta and you're not going to like that. I know some of you own Meta, you're not going to like that. I hope you understand. I'm not attacking you personally. Just my opinion. Now, Microsoft, on the other hand, Microsoft came in damn good. Now, they did beat revenue. They did beat Jesus Christ. They did beat revenue. I'll show you. They beat revenue. They beat earnings. They beat across the board. Okay. Standardized EPS at 481, reported 474, estimated at 423. That was an 11% beat on EPS. Revenue came in at 90 billion, estimated 87 billion, surprised at 2.39. Okay. They beat on revenue. They beat on earnings. Something to consider here, though. They are factoring in this, like, these paper gains. I don't know how much it was. $3.2 billion non-operating paper gain from its investment in Anthropic, right? So if you take away their $3.2 billion, they miss. But to be fair, estimates included it. And this is something that annoys me about the people who don't like Microsoft. They say, well, you take away the 3.2 billion and they miss. Yeah, estimates included paper gains from Anthropic because all of them have reported them with them. You take that away, you also have to take it out of the estimate, right? So it would have been closer, but they still would have beat. They still would have beat. And so Microsoft beats across the board. But that's not the big story. That's not the big story. The big story from yesterday with Microsoft is the fact that they didn't raise their CapEx guidance for 2027, fiscal year 2027, which is not the same thing as a calendar year. Meaning that the amount of money that they pledged to invest, I think it was like 225 to 240 billion or something like that, for 2025 fiscal year, 2027 fiscal year, that's how much they're sticking to. They were the first of the major hyperscalers to say in an earnings report, we're not planning on spending more than we already said we were going to spend. They still can, but they were the first ones to say we're not doing it. And so they were the first ones to break this perpetual cycle of always having to raise guidance for CapEx, right? And now I said, before this earnings report, I said, I don't think you can. I don't think you can come in and not raise guidance because the market, it's a risky bet. That was my whole point. I'm like, that's a risky bet to take. Because you know what the market could do? The market could punish you for it. They say, oh, what? You're not as confident in the bet you made anymore? We knew you were wrong. And then you see that price really start to collapse. It could take it that way. Not how the market took it, though. It was a gamble, and Microsoft won. They damn won. It was a gamble, dude. But they won on it. And Microsoft came in, and sure enough, stock pumped. Look what happened. Look where we are now. Look where we are now, man. Absolutely sense. Now, does it last? I don't know, right? There's still a lot that needs to happen, and we're going to get into market open analysis here in a second. But still, it worked, and now obviously some of these positions are decent. You guys know I've been building into my Microsoft position. I honestly I'm sitting here thinking I should have bought more, but you can never try to buy around earnings. It never really works out. But my Microsoft position went from being 1% positive to 11% positive today. That's how fast it can happen. So many people were waiting to buy Microsoft after earnings because they said it was going to raise CapEx guidance and crash. And then look. So you can never try to guess around earnings. That's why I was like, you know what? I'm just going to buy a little bit today, a little bit tomorrow, a little bit the next day. I was just building into it anyway. Because had I not done that, I'd have missed. And look, this is not a big position. This is not a big position. But I mean, think about it. This is a 2% gain on my total portfolio allocation. I'm allocating $10,000 to this hyperscalers trade right now. And Microsoft alone has brought it up 2% today. It's pretty good. Pretty good. And I only have $4,000 deployed. So a $200 gain on a $4,000 portfolio is more than that. I don't know what that number is. What's $200 gain on a $4,000 portfolio? Like 5%? So yeah. So it feels good. That was a gamble. Now, you know what this does is it opens the market up. It opens up the question. It begs the question of what happens with Amazon and Apple now. Apple, not so much tied to these ones. But Amazon is the one. What do they do? What do they do? Does Amazon stick to it? A little bit hard with AWS, right? They've already kind of hinted that they'd be looking to raise guidance for CapEx. Do they raise or do they not? Because if they don't, do you see it? Do you see it come back up here? Because look what happened. Google beat on earnings. I'm sorry. It beat on revenue. It beat on EPS. And it raised guidance for CapEx. Well, I guess it raised guidance and it raised CapEx. Let's just do it like that, right? It raised CapEx. Google stock fell 10% as a result, all because of this. All because of that, the CapEx. Microsoft beat on revenue, beat on EPS, raised their guidance for next year, terms of revenue, kept CapEx flat, and it pumped 10%. So now I'm looking at Amazon and I'm going, well, which one do you do? Which one do you do? Now, I would assume their decision was already made before yesterday. I bet that's interesting on Amazon's part, though. Because why? I mean, one thing you could consider doing. I mean, why not? Let me think about this. Like, why not go the Microsoft route? Amazon's probably going to beat on revenue. They're probably going to beat on EPS. They're probably going to raise their forward guidance, right? They're probably going to do those things. Why not keep CapEx flat? And if you need to raise it in the future, raise it. If you need to spend more in the future, spend it. And then announce it. Cross that bridge when you get there. But in the meantime, you can provide a little bit of relief to your stockholders, your shareholders. Why not? And I guess technically, if you do foresee having to spend more, you have a fiduciary duty to announce it. So, but they all lie. They all fudge numbers, bro. They all fudge numbers. Is what they do. They're gods at it. So it's like, if I'm Amazon, I'm just taking that same route and just break this perpetual cycle that everyone's been in of having to raise CapEx. And then you know what that does? Unfortunately, it makes Google look dumb. Because no, not dumb. That's not the word. It makes Google look more risky. So now Google's taking the higher risk, higher reward play here. Because if the CapEx bet works out, Google goes, we were the ones who were the most committed to it. We were raising our guidance when everyone else started pulling back. We went us against the grain, and then Google sends it. If the CapEx bet doesn't work out, though, it makes people look at Google like, oh, how good at this can you actually be? It's a weird situation that they're in. And if you're Amazon, you can put that pressure on Google. You can put that pressure on Google and join Microsoft in the group of ones that people are excited about. This is an interesting little situation happening right now. This is an interesting situation right here. Oh, look, shout out to this fella, right, by the way. This is a good point. You know, one thing Microsoft did as well, Microsoft really explained why AI is beneficial to them. And so it's like, although they didn't raise their CapEx, they didn't in any way make it seem as if they don't believe in it anymore. They just said, yeah, we trust our calculations. We trust how much we've set forward to this. And yeah, so it's going to be a very interesting situation, but Microsoft was clearly the gem of everything that was happening yesterday for the big ones. And yeah. And I also think a part of the reason as to why Meta fell so hard was because Microsoft performed so well. Because this happened with Microsoft. I don't know where I was at. Was I on this one? No, I must have been on this one. Oh, maybe I was on this one. Yeah, there we go. I think a part of the reason as to why Meta fell so much is because Microsoft performed so well. Whenever you have them going head to head, Microsoft gave the market something it liked. Meta gave the market something it didn't like. And I think what happened is you also saw people rotate because people will jump between Meta and Microsoft interchangeably. Not really the same company whatsoever, but yeah, man. So that is the reason, of course, why I was done. So it was a whole little thing. It was a whole little thing going on yesterday. I'm so interested in what Amazon does now. Apple's a different story. Apple's a bit of a different story. They're just not really dabbling with all this. They're not really getting involved with all this. I'm just curious about Apple because they're the biggest company in the world. Where are they at right now, actually? How much elevated are they? Yeah, they're up there now, really. Going to be a big one. But yeah, I'm going to be live for that, by the way. I'm going to be live for Amazon and Apple earnings. I am going to do, I'm going to go over the numbers and stuff in this live stream before the earnings report. Okay. I'm going to talk about the expectations, what we're looking for, all that stuff. So make sure you're there for the live stream. Okay. Can Microsoft hit $450 today? Obviously I don't know is the only answer I can really give you, but I think it will be hard for Microsoft to hit $450 today. And the reason why I say that is because it does have a golden zone sitting directly above us and a downtrend. Now, to be fair, I drew that wrong. Let's see. I don't know why it shifts sometimes. It would have to literally go straight vertical the second the market opens. For it to hit 450 today, in my opinion, it would literally need to go straight vertical 5% as soon as the market opens. Every hour that goes by, that gets harder because you have that downtrend pressure and you're in golden zone already. So I wouldn't bet on that personally. Yeah, I wouldn't bet on that personally. But I guess we'll see. So that's that. That's what happened. So we covered PCE data. That was a bit of a recap. Let's do some market open analysis. Hey guys, if you're finding this stream valuable, like if you feel like you're staying up to date on everything and you're getting a lot of value out of it, again, please do just hit that like button for me. Okay, let's just kind of wait it out, see how it goes, and see how the market responds to open. I do need to go in DCA though. I need to go in DCA. I'm just trying to figure out what I want to do here. So I have $300 to deploy today. I had 300 day before yesterday, 300 today, 300 the day before yesterday, 300 yesterday, 300 today, 300 tomorrow for my $1,200 allocation this week. I'm contemplating how to do that today. I think what I'm going to do is increase my. So I'm going to go in on 125 on Google. That'll go in a second. And then I'll just wait it out and see. It spooks me buying Amazon before this freaking earnings report. But let's go. Screw it. You know what? I'm DCAing. I DCA whether it's up. I DCA whether it's down. That's my strategy. That's what I'm doing. So 125 is 250. And then I'll take just an extra 50 ball and throw it at Microsoft for today. Go in on these when the market opens. Do my $300 DCA for the day. Post this. God damn it. Okay. All right. Oh, $5. Shit. No, there we go. Okay. That's 300, right? 250. Yeah. Okay. Okay. Now let's look at. Is it free to join your Discord? No. My Discord is connected to Tyler Hill, TH Capital. TH Capital is linked in the description down below. I want more Robinhood here. I want to just dollar cost that. Ugh. Yeah. You know the reason I'm hesitating on Robinhood is because I know how this shit goes. I know how this goes. It's the reason I'm hesitating is because I know how this goes. It's like you're in the downtrend, you get your relief rally back up to the golden zone. You're in some sort of, you're in your ascending structure, and then you break down out of that structure. It's what happens like 70, 80, 90% of the time. And I'm like, I just know Robinhood at some point is going to find itself down here. I don't know. I wonder, maybe I'll hold off on the Robinhood purchase for now because I wouldn't be mad. It's one of those situations where it's like, let's say Robinhood just sends it for some reason all the way back up towards an all-time high, a random thing to happen, which I don't think is going to happen. But let's say Robinhood does give us a gain of like 75% or 50%, whatever. I'll be very happy. I mean, my Robinhood position already is $7,000, right? I'll be happy with that. But after what I saw yesterday, it's just hard not to engage because I'm right around my break even. Okay, this is what I'm going to do. I'm going to drop $1,000 on Robinhood. I got to make a deposit. I'm going to drop $1,000 on Robinhood just because we're back on my average cost and I'm more bullish on them now than I was 2 days ago. That's my plan. Let's see. Now, I know Robinhood's going to end up falling from here. I'm almost 100% positive. So I'm not going to deploy more than that. I still have 2 more thousand I want to put in, but I'm going to save that. I'm going to save that for now. I'm going to save that for now. I'm going to save the other 2,000 I have allocated for Robinhood for now for when it pulls back. Sorry, I'm doing a transfer right now. Why? There we go. Okay. Go in, scoop up. Robinhood, $88. That's actually lower than my average cost. Did it fall? Oh shit! What good timing. There we go. Okay, that makes me happier. All right, I got that. That worked. That worked. Okay, cool. So here we go. Scooped it up at 88. I told you. I was like 100% positive it's going to fall from here, but it's fine. I don't care. All right. How's SoFi looking on open? I'm happy with the purchase I did at 15.20. I think I'm only going to go in and deploy more if I can scoop it under 15. If I can get SoFi under 15, I'll go in and do more buying. If not, I'll just I'll sit on that $1,000 I deployed yesterday because I've deployed what $4,000 this week or something. So about a 1% deployment this week so far across the port, something like that. Yeah, cool. Why is MasterCard going vertical, bro? Our MasterCard hedge has honestly worked out so wildly well. So I put about like $3,000, $3,500, $3,400 into MasterCard because like I want to hedge against the current the situation that we're in right now. I think credit services are going to do well if all of this goes south. And so I hedged it. I made $500 on the MasterCard position. We're $500 on the MasterCard position. How freaking funny is that, dude? That's hilarious. I honestly thought this was going to be a boring position. This is my best performer this like in the last like month. That's so funny. MasterCard earnings was that was a few days ago, wasn't it? Wait, when was there? No, wait. Pause. MasterCard's earnings was today. Yeah. It was today. You're right. No, that was Visa the other day, right? Let's see. Okay. MasterCard reports Q2 adjusted EPS at 504, beating consensus at 478. Sick, dude. I don't even give a shit. Like MasterCard's just a hedge. I don't even really care about this. That's so funny. I'd literally blank that. Let's dive into it then, huh? Wow. Revenue came in at 9.3 billion, topping analyst expectations at 9.06 billion, EPS at $5.04 per share, expectations at $4.77 a share. Another beat for MasterCard. Let's go, dude. Let's go. 5% beat on EPS, 2% beat on revenue. That's their best beat since, well, wow, damn, I forgot about that happening. But I mean, that's one of their best beats this year. That's their second best beat this year, man. Let's go, MasterCard. Freaking send it, dude. Let's go. That's sick. It's literally just a hedge play for me. So I wasn't even paying attention to it. And it breaks golden zone. That's so interesting. I mean, maybe like, is there a world in which we see MasterCard pushing all-time highs? I could see it. I could see MasterCard giving us a $647 push. I could see it. This is a juicy shit, dude. Now it hasn't pulled back in a while, so I wouldn't be surprised to see it pull back at some point, right? Might get a little bother with other news here, but let's go, man. Freaking MasterCard, bro. $500 gain on that bad boy now. Sure enough. Look at this. That's sick, man. You love to see it. You know, whenever I was debating whether I was going to hedge using MasterCard or Visa, I chose MasterCard because it was more, it was just a little bit higher beta. So in the last 3 months, MasterCard's up 15%. In the last 3 months, let's see what would have happened. I was going to buy Visa. I changed it to MasterCard. Yeah, nice. Nice. Good decision. Good decision in the short term. I don't know how long I'm going to hold on to the MasterCard position. I don't know. I don't know. There's no way Microsoft is hit 450. Are you kidding me? I was wrong as shit about that. I was really wrong about that. God, I was very wrong about that. I literally just said I wouldn't bet on it hitting 450 today because it would have to go straight vertical at open. And it fucking went straight vertical at open. Yo, I have to go clip that. I have to go I'm not gonna post that. I have to go get a clip. That shit is so funny. Treats, bro. Treats, bro. Treats, bro. Come on, man. What are we doing? We knew it. We knew it. We literally knew it. Me and Treach in the live stream yesterday. We're talking about, man, Microsoft just feels different. Like, we should just full port it. Like, we should just get in on Microsoft. Just buy more. We're like, you don't want to do that around earnings too much. We literally knew it. We literally knew it, and we didn't do it because, like, Treach, what are we doing, bro? What are we doing? What are we doing with our lives, man? I feel like you'd be a great shorter or put with how you can indicate possible declines. Oh, thanks. Well, I didn't think that was about to happen. Oh, wow. It came straight up to trend. Look at that, dude. Look how it just came straight up to trend. What oh, bro, where did my buy order go off at? Where did my buy order just go off at? Oh, God. There's no way it was good. Let's see. $430. Oh, that's not bad. It filled at 438. It's not bad. Okay. I thought it probably went off at like 450. Bro. I opened this position 4 days ago. And I'm so upset that I didn't put more in. Because I'm like, don't get me wrong, I'm happy about a 15% gain. But it's like $280. Like, I wish, I don't know. I'm kind of having like regret. I'm questioning whether or not I should have been going in heavier, or if it's like, is that just me being greedy? It's probably just me being greedy. I got to be disciplined here, but like $278 is great. Especially, I just need to remember, brand new portfolio, $10,000 port. I've only deployed $4,200. So a $300, I'm almost up. This portfolio itself, yeah, $300. It's up $300 on what, 4,200 deployed. It's like a 7% gain in a week. Oh my goodness, that's crazy, bro. It's like, don't give me hope. You know what I mean? It's like, I sit here and I get a little bit excited, but I know better. Like, and I want to make one thing clear. I am very happy right now because I freaking love Microsoft. But I am very aware of how this market acts. And I'm just excited in the moment, but very aware what sort of market we're in right now. I'm not getting ahead of myself. Okay. I just want to make that very clear. Does feel good though, man. Wow. If you're, dude, if you're Amazon, how the hell do you not just do what Microsoft did? Because you know it pumps. You know it pumps if they do. Man. Oof. Oof. Be real careful now, folks. This is about that time to be real careful right now. Let me show you what's going on here. Okay, let me give you a little insight. All right, let's give you an insight. Okay, you got the trend. You see this downtrend? This gray line? That's your trend. That's a seller zone. This is where the sellers have historically been getting out, and they're doing it again right now. See how we hit it right here, and it immediately started pulling back? That's your seller zone. Below your seller zone, you have the golden zone, the golden Fibonacci zone. Although we're above it right now, I need you to understand it's still strong. It's still there. Sellers are going to try to get it back under it. They're going to try to drag it back into this golden zone. And while all of this is happening, while you're at the trend, while you're at the golden zone, daily 4-hour HCI is at 4.65. Remember, my sell indicator for me personally is 4 to 5. Anytime the HCI goes between 4 and 5, I sell. Now, the thing is, though, I'm looking at the 4-hour chart. I'm not looking at the daily chart. The daily chart is only at +2, but this is not updated. It is updated. It's just the trends all messed up. But the daily is only at +2. So I'm not going into my actual bag and selling, not based on a 4-hour HCI. A 4-hour HCI makes me go, uh-oh. People are probably about to get, there's a chance that people are about to get baited into buying around 450 to 457. And then it maybe pulls back towards like 430 to 428. Now I could be wrong. Again, I was wrong earlier. I didn't think it was about to do this. The risk versus reward is now out of the favor of buyers. Risk versus reward for the next 24 hours is in favor of sellers. Microsoft has a higher chance of coming back down into this golden zone than it does breaking above this trend. Meaning Microsoft now has a higher chance of pulling back to around 440 to 430 than it does of breaking to 460. Okay. I would probably give it 70-30 odds. 30% chance it breaks out here because it does have strength and momentum, and the market's just waking up. So market could wake up and give this thing some legs. 70% because this is still your rejection zone. Okay. This is the nervous zone. This is the worry zone. This is where sellers are going to step in because people aren't confident that this is going to hold. Just like it immediately capitulated here and immediately capitulated here, people are going to look at it here and people are about to start taking profit, especially because your indicators are starting to get really hot on the shorter time frames. I want you all, look, celebrate, do your happy dance, be excited, be very, very careful right now. What will invalidate the cautiousness is if Microsoft breaks above 451 today and stays above 451. If it breaks above 451 and stays above 451, and look, let me go in and actually add a little timestamp here. Bang. I want you to watch closely what happens at 451. If it breaks above it, it invalidates the downtrend and it establishes that it has successfully broken the golden zone. That's actually a signal that Microsoft is probably coming back to 470. Microsoft's probably coming back to 470. I actually could see Microsoft coming in somewhere up here. If it breaks through the trend, be very careful while Microsoft is right here. So I know you see me excited and you see me happy. The reason I'm excited and happy is because I was buying Microsoft down there. I was buying Microsoft at 384, 399, 397. So I was buying Microsoft at 384, 380. So 384 here, 389, 397 in this cup and handle pattern. We were buying here. Now it's pumped. I'm not buying here. I would not buy here for the short term. I would rather wait to see Microsoft break through this trend first, and then I would be. So I know it sounds counterintuitive. Like, Tyler, you'd wait for it to go up before buying. Don't you want to buy it when it's lower? Yes, that is exactly what I'm saying. I want to see the buyers capable of breaking above that downtrend. I need to see them break this resistance first because I know it's going to be hard with this 465 reading on HCI. Not impossible, 30% chance. That's 1 in 3 times. That's not that bad of odds. It's just not good enough odds for me to buy. So I know I'm happy. I'm excited. I love seeing what's happening with Micron. What the hell is going on with Sandisk? What the fuck is going on? Okay, what the fuck? Okay, give me a second. Be careful with Microsoft right now. What the hell is going on with Sandisk? Hold on a second. Jesus Christ, bro. I gotta update. Hold on. What the fuck? I'm so glad we're on live right now. Okay. Yo. I'm getting out. I'm getting out. Yo. I told you I was going for a 40% gain or death. Yo, what the fuck is going on today? So it takes Microsoft not raising CapEx for this market to rise. This is the dumbest market I've ever been in before, bro. Yo, what the fuck is going on? It doesn't even make sense. That's the thing. That's the thing that gets under my skin a little bit, is that it doesn't even make sense. It's like, why is memory pumping? Because Microsoft said they're spending less on this shit is ridiculous. It's just like but it's like we positioned for it. So we're making money today. I mean, what's my portfolio? This is, dude, it's so funny. This is so funny. And I know better. Like, I know it. I doubt it's going to last, but it's so funny in the moment. What's this up today? 4,000 something? Yeah, 4,500 bucks. Oh my goodness, bro. And it's like, do I think this is going to last? I'm not naive enough to think that, right? I'm not naive enough to say we're back. Because listen, look at Micron, for example. Micron's in a downtrend. Lower highs, lower lows. Micron just dipped into the buyer zone. Do y'all remember when I told you? I said, look, folks. Micron is in the buyer zone. The buyer zone ranges between 755 and 697. I told you that. And I said, the thing is, there's a good chance Micron bounces out of this buyer zone and maybe tries to chase down that trend up here. It chased down this trend up here. And I told you, you can't say we're back until it breaks this trend. Because what easily can happen is just like this. Reverse to trend, pull back again. So Micron right now is just, it's coming back up to test it. What it's really doing right now is testing this previous support and seeing if it can get some steam. So Micron wants to try to go back up to trend. If it breaks trend, this is us being back. While it's still below trend, we are not back. We are not back. And I know you're not going to want to hear that. I don't care what you want to hear. I'm telling you what you need to hear. We are not back until it breaks the trend. But the fact that it's rallying right now is so funny to me. It's so damn funny to me. It literally caught me so off guard. I hope you guys saw that. I wasn't expecting to look over and see that. Same thing with Sandisk. I told you guys. And I'm trying not to do the I told you so thing, but it is really hard not to. So I'm sorry in advance. Sandisk came down into the uber bearish zone. I said, look, this is usually where it'll bounce. Between 1.272 and 1.618. This blue line and this green line, this is where Sandisk will usually bounce. The fact that Sandisk was coming back to around the uber bearish zone, I'm like, yeah, I'm going to open up a punt of a long trade because I think there's a world in which Sandisk bounces off this and tries to come back to trend. Yo, y'all remember when I was contemplating whether or not I was going to reopen those long trades? I'm so glad I committed to it. And they're little punts, but they make me extra cash. And I love that. Now I have $50 extra from the Sandisk long trade. I'll just go spend it. I'll go bring my wife to go get dinner tonight, or maybe not dinner, not in Texas, but go do something fun. I love it. I love it. It doesn't matter. I mean, my portfolio is of $5,000 today, so it's not really making a dent, but still, it feels good. Wow. Well, I will let everyone know. I do all my trading on Liquid. This is just, in my opinion, the absolute best platform to trade stocks on. You can go long, you can go short. As you can see, I've done pretty decently recently. Made some pretty decent gains here. 42% gain there, 16% gain there. And these are small trades. Don't get me wrong, 9% gain there. But this is where I do all of my trading personally. It's absolutely amazing. They give you great bonuses. You get great rewards. If you use, I'm an affiliate of theirs because I was trading with them. I was like, people need to use this. People need to see this. So if you do want to check out Liquid, look, I have a link. It's down below. Go sign up. If you do use my link, you're going to get some sick bonuses and you're going to get rewards, one of which being 10% lower trading fees. So think about it. That in theory can give you an extra 10%, right? Not on your total return, but in the amount that you were going to pay in fees. You get money back in a way. Right. So feel free to check out Liquid. It's linked down below. Great partner of mine. The team is awesome. I've met the team personally. They talked to me about what they're doing in the future. Very awesome guys. So I'm going to leave the link down below. If any of you are trading, check out Liquid. At least give it a try. Let me know what you think. But damn, that feels good. That's a good, who just said that? Who the hell just said that? This makes me believe that the market was pricing in the slowdown of CapEx. They knew. So with the weekends out, now they pump. That's a good take. That's a good take, dude. Let's see what happens with Amazon tonight. That's a damn good take. Market was pricing because the market, it's weird. Is it buy the rumor, sell the news? But reverse, sell the rumor, buy the news. Is that what's happening? It only is true if we're back, which we're not back yet, right? Because again, Sandisk, for example, needs to break the trend. Micron, for example, needs to break the trend. But it brings to question, is this a sell the rumor, buy the news? Were memory stocks pulling back because people knew that there was going to be a slowdown in CapEx coming, institutions, whatever. And now that the slowdown is here and it's been repriced, the sell the rumor happened. Now it's a buy the news event, which is the opposite of a buy the rumor, sell the news event. It brings it into question. I'm not convinced. I will not be convinced that AI stocks are back until they break these trends. I'm making that very clear. They are not back until they break the trend because they are still in a downtrend. And I know I keep saying it over and over again. People aren't listening. I know there's one of you on here who's still not listening. Lower highs, lower lows. This pump means nothing while we're in a downtrend, because when you're in a downtrend, you go down. So just because it's pumping right now doesn't mean it can't dump from here. Please remember that. Please remember that, okay? When it breaks this trend, that's the sign that something's changing. Until then, we are just doing what we've done multiple times. We pumped there, we pumped there, we pumped there. We're just pumping. We're not back yet, okay? Please keep that in mind. Drew Rose, nah, chill, bro, we back. Do I close this? I'm not, I don't want, it's a weird one. This is a weird one. Do I take a 10% gain? Hey, y'all let me know. Do we take a 10% gain? 9% gain? It's little. I mean, it's literally $9, but you could live to fight another day with a $9 gain. Has this type of parabolic up ever happened? Yeah, it's happened many times. No, long run. Go for 50. Profit's profit. Profit's profit. It's one of those things where it's like, because this is my thought process, right? Micron has another 10% to the top. That's a lot. That could be a 30% gain if Micron runs from here. But you got to consider the flip side. Look at what's happening right now. Look what's happening right now. You see this previous seller zone? Or previous buyer zone? You see where the buyers were stepping in right here? Sellers are going to step in here and try to force Micron down. I don't know or think that they're going to be successful, but there's a risk, right? There's a risk that they are. There's a risk that you see those sellers coming in and force Micron down. You could. I think for some reason, it feels like the more likely scenario here to me is that Micron actually does return to trend. We do see it come back up and test trend. I just wonder if it's not linear. Why does that keep happening? Hold on, give me a second. I wonder if it's not linear, non-linear. And it looks like I wonder if it's like, right? What if that's the return to trend? If that's the return to trend, it's like, yeah, I'll just take a tiny little gain here and call it a day, right? The only way me taking a little profit off the trade would suck is if it just does that. I don't know if it's going to do that, but I guess we'll see. What is going on, bro? Trading View's tripping. I guess it's because everybody's looking at this chart right now. But this is a huge moment for Micron. This is actually a very big moment. If Micron does break, all jokes aside, if Micron does break this little red line right here, which is already doing, no, it's not even really a little red line. It looks more like that. Micron breaks that red box, dude, you're probably coming back to trend. I think you see a Micron pushing back up towards like, maybe $900. Now, again, we're not back yet. You can't say we're back yet. And I keep reiterating that because I need that to be buried into your brain. But it could be a nice run. It could be a nice run if Micron keeps the legs going. It's just weird, man. It's weird because, like, Kospi was so down. Or Kospi was, what's it called? Kospi was negative. One thing that it does make me question is, are we seeing a Kospi performance? Because remember, Kospi on open it had legs, dude. Kospi was up 9%. Is it 9%? Yeah, 9% it was up before ultimately pulling back into the day and closing negative. I don't know. I'm happy with it, though. I'm happy with what we did. I like to just do hit and runs. I feel like I'm basically just like breaking the glass at the jewelry store, snatching something and running. And we've been doing like snatch and go, or what is it, a snatch and grab? What is that called? I'm not a criminal, so I don't know, but that's what we've been doing. Just like snatching gains, like snatch 6% there, snatch 9% there, snatch 16% there, snatch 42% there. Just snatch them. And I do this all the time. I only just recently started doing this on the channel. But I guess I could probably pull up my other account. So I have a second account, the one that I trade on, my personal account. I created this one because it's connected to my affiliate link. So you guys can get my affiliate link. It's like Tyler Hill or whatever. But I do these all the time. I do these little $100 punts all the time. And sometimes it works, sometimes I don't. I'm probably like slightly positive. What's going to happen? So you see how I'm up probably about $100 in the last few days doing this. I'm probably going to blow up one of them at some point and then lose 100. Because I'm not, listen, I know to be a good trader, you need to set it to where your risk and your reward. I'm not a trader, dude. I'm just someone who uses trades as an opportunity to make some extra cash. That's what I do. Sometimes I win, sometimes I don't. It's not a big deal. I let my long-term portfolio do its job. My bag is up $5,000 today. That's cool. That's erased some of the gains from this week, some of the losses. You know, we were down $12,000 on the week at some point. Is my camera, do I have my camera out here? I need to show them. I need to show the. No, I guess not. Damn, man. Amazon could really set all this on fire, bro. In a good way or a bad way. In a good way or a bad way. If Amazon, it's crazy that Google's getting punished for their raise on CapEx. I bet if Google could go back, they would take it back. If Amazon, I'm not doing it. Ooh, but I want to. There's a piece of me that wants to punt on Amazon so bad. Open up the 3x leverage. Open up the 3x leverage. $100 punt on Amazon. Bet they come in for the lower, on the similar approach as Microsoft, and then see them bang pop up to 250. I'm not going to do it because I think that's stupid, and I don't actually like to take punts on stupid bets, but it would be funny, to say the least. SoFi looking decent on the day. I might not get my opportunity to scoop more SoFi, which kind of sucks, but I guess we'll see. I mean, there's still a lot that needs to happen for SoFi to be back. MasterCard pulling back a little bit. NVIDIA not really having a crazy day. Back into the golden zone, though. Bounced off that green zone. That's good. I told you all with NVIDIA, I said, look, you need to watch this green zone. Because I said, listen, if NVIDIA falls below this green zone, it's coming to 183. You see it come down through this support, you're coming back to 183, possibly as low as 175. So the fact that NVIDIA did give us that reversal off of that, that's a good sign. The buyers are present. And even if NVIDIA does give us something like so, right? Something like this, yeah, maybe you get a little pop from NVIDIA here. This is a good sign. People just don't really care about NVIDIA right now, which is one of the reasons why I'm actually bullish on NVIDIA, and I do think NVIDIA is still a cautious buy long-term, but yeah. We'll be interested to see how it handles this, though. You see this buyer zone back here and this support? Be curious to see how it handles running into it now, especially because it aligns with the golden zone right here. Man. Oh, I will let you guys know. This is going to be a bit of a shameless plug as well. The moves that we made yesterday on Sandisk and on Micron. So the gains that we just made. 42% gain here on Sandisk, 9.2% gain on Micron. The technical analysis that we did was based on two things: the structure and the TH toolkit. Okay. So if you were watching the stream yesterday, you know the TH toolkit gave us the signals. The TH toolkit on the 4-hour, the HCI, the Hill Conviction Index, it was sitting at 4.4. I personally look to buy when it's anywhere between -4 and -5. For Sandisk, it was at -4.5. You can see it right here. Watch. -4.5. That was my trigger to go in and do something, make a move. And that was the exact reason why we got in. Same thing goes for Micron. Go look at Micron. Micron was a bit higher, I remember. No, it was lower. Sorry. Micron was at 4.78. We entered when it was a bit higher than that, around 4.5. So the Hill Conviction Index, the HCI, told us, hey, we're dipping into this lower zone. It doesn't mean it has to pump because, look, there are times where you'll just go down and then you'll go lower, right? So it never perfectly predicts a bottom. That doesn't exist in the stock market. But it said, hey, this could be a good time to consider accumulating. And the fact that we were at structure, it was my trigger. It was my trigger to go in. And if you were on the live stream, you saw me do this live. I'm not LARPing. And yeah, and now because of that, we're up. So if you want to use the toolkit, okay, which includes the hill zones, which automatically tells you where you can expect people to sell, as you can see here, and when you can expect people to buy, as according to the green lines, as you can see here, as well as the Hill Conviction Index, which is a meter. As the price goes up, the meter goes higher. The higher the meter goes, the more risky that stock is becoming. The lower the meter goes, the better of a buying opportunity that it potentially could be for that stock at that time. Okay. So I follow the meter to determine if I'm going to maybe buy or sell, if I'm going to open a long trade or a short trade. That's the exact thing I used to just make a 42% gain and a 9% gain over the last 24 hours. Okay. If you want to use it, go down below. There's a link to the toolkit. The coolest part about it is it's a one-time purchase. You don't need to go in and pay every single month. I don't like that model whatsoever for indicators, because some months you're just not going to do technical analysis. This is linked down below. It's a one-time purchase. The money that I just made off yesterday pays for what, half? Because the toolkit's $99 forever for lifetime access. I basically just paid for toolkit for half the toolkit. If you include the 2 trades we did yesterday, we're nearly got the toolkit for free using the toolkit yesterday. Now, will it always work that way? No. There was definitely luck involved with the timing today, for certain. Who knew Microsoft was going to do that? But you get the point. It can show you where those opportunities may be. So feel free to go grab up the toolkit, link down below. It can pay for itself if you get the right luck. If you get the right luck. And people who use it can tell you that as well. So, yeah, man. What's crazy? Let's see. What else is going on here? What did you update on the toolkit? I updated it to where it shows you the historical performance of the HCI in moments. So as I move through these days, this number up here updates you and tells you what the HCI was on that day. So you can get more historical context. And yeah, any further updates you also get with your lifetime purchase. The toolkit got me up 36% this week. It doesn't always work that way for everyone, but you get the point. AMD. Shout out to Jeremy LaFab. Jeremy's a great YouTuber, man. All right, this is where we are with AMD. Very, very simple, okay? Okay, very, very simple, okay? Look what's happening. Pay close attention. AMD just did a really good thing here. Okay, AMD did a very good thing here. Made a beautiful move. Coming off that low, $422. I was going to open a long trade. Treach was here. I was going to open a long trade. I decided not to. Kind of pissed. Gave us a beautiful run to the upside. AMD up 12%. AMD up 12%. But now that it's up, okay, now that it's up, and look, let me update the timestamps. Now that it's up, what you can very clearly see here is that it's now running into a major zone. All right, major zone right here, folks. You see how we had this support? The buyer stepped in and pushed the price back up right here. Guess what? The sellers are now going to step in here and try to force that price back down. AMD has some legs under it right now, so I think the buyers have a good chance of winning here. But now that AMD is right here, this is not a buy. This is not a buy right now. Buying in a major seller zone like this is a terrible idea historically. It doesn't mean that AMD can't go up. It can go up. In the short term, like very, very short term, next couple hours, next couple days, AMD just has currently a higher chance of pulling back either temporarily or I guess not permanently, but you know what I mean, than it does breaking through it. This is a massive zone of resistance, okay? So this is not a buy. This is either a short-term hold or a long-term, a short-term sell or a midterm / long-term hold. If I'm a long-term holder, I'm just waiting and seeing if it breaks through this red zone, currently sitting at 486. If I'm a short-term swing trader and I caught it, say 426, 427, and I'm looking for an opportunity to exit, yeah, if I'm swing trading this, a quick couple hour trade, this is where I'm exiting. Again, not because it can't go higher. It can go higher. And if it breaks through the red zone, you're probably going to see AMD pull itself back all the way up to 503 to 527. Listen, 500 is a very strong psychological level. AMD can push to the golden zone. It's just getting risky now. So you can hold it to the golden zone if you want. Maybe it breaks the golden zone. Maybe it goes higher. That's more of a midterm sort of thing. I'm talking about the short term. If you're looking for a quick scalp, this is about when I start looking to exit. It's the same reason I exited Micron. Not to say Micron can't go higher. Micron might go higher. I'm just not going to wait and find out. I'm taking my profit and I'm running. That's what works for me. Okay. So we'll see. But if you're an AMD holder, what you're looking at right now, does AMD come up and break that red box at 485? Does it break that box at 485? And if so, yeah, I think you see AMD open up for another run back to the golden zone. I think it tries to push 500 again. Keep an eye on it. SK Hynix. SK Hynix is spooking me because of this. That's so much. You see all this? Support, capitulation. All that buy pressure is going to be sell pressure. SK Hynix is a pass for me for now. Just it's spooky. It's spooky while it's on it, especially while we're still continuing to see the deleveraging over in South Korea. Spooky to me. Broadcom. I made it very clear here. I mean, I don't need to really LARP on this one too much. Broadcom's not back until it breaks the trend. It's really just that simple. It's really just that simple. Until it starts to break this trend that it's clearly been respecting. Right here. Till it starts to break above this, Broadcom's not back. Very, very simple. Very simple. Wow. What's that gain on the day? 15% gain on the day for Nebius. Wow, 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 wow. Damn. Nebius. Let me get some water in. Okay. So, Nebius is not back yet, but Nebius is doing a great job. Nebius is doing a very, very damn good job. It's actually here. Wow. Look at this. Here's your trend. Very clear. Clear as day. I bet it lines up. Sure enough. Wow. This is your trend for Nebius, okay? Tyler, your toolkit, will you update it to show a golden zone? There's too much nuance to a golden zone because there's so many different time frames. It's very difficult. I'm trying to figure it out. I don't know. That was something that we kind of blanked on for about 7 months. It's just sometimes it's easier for me to just turn on the toolkit and then just do this. You know what I mean? There's just nuance to it. But anyway, when it comes to Nebius, very simple plan here. Very simple plan. Enjoy it. Great day. Beautiful bounce off the lows. Confirm the bottom side of the trend. That's good information for later, okay? But now Nebius is in the danger zone. It has golden zone right here. Top side resistance right here. I would assume, if I just had to guess, I was wrong. I was wrong on the 4 hour. 1 hour. The 1 hour HCI is at plus 4.21. 4 hours still at -1. So some legs, got some room. But as it's approaching the top side of the structure, this is where all the danger is. The danger for Nebius is between 187 and 208. That's where all the danger is. So Nebius is not a buy now that it's at the top side of the structure. I would either be looking for it to reverse down into the bottom side of the structure again or get out the structure. Buying towards the top side of the structure, like you would have maybe here, like you would have here, or like you would have here, it's just dangerous. It's dangerous. So great move from Nebius. Love to see it, but very similar to the rest. Now that this has happened, long term, midterm, hold. Short term, take profit. If you were catching a swing, for example, on Nebius off of that low, and now it's running back up to golden zone like it is right now, I believe. Yeah, and it's getting rejected on it. Yep, that is exactly when I take profit. Not again if I'm a long-term or midterm holder. If this is something I'm holding even for weeks, I'm not selling here. I'm just holding, right? Because I believe in Nebius. But if I was just scooping it, taking the trade off the bottom side, running it up to the top, guess what? It's showing overextension on the 1 hour and is back at the golden zone nearing the top of the structure. That's a great time to take profit. And if you scooped it off that low, I mean, 26%, if you use any sort of leverage, you could be up anywhere from 50 to 100% or higher. Yeah. Yep. 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 Is crypto up today? It's doing okay. Yeah, this is what I was warning you all about. You see how it's slowing down here? See how it's slowing down here? As soon as it hit that trend, that's why you can't ignore a trend. The trend is your friend. The trend is your friend. Man, I really want to go to American Express buy, dude. I just don't really know if I don't know if the market's gonna give me one. Hard for me to justify it over 300. Really want it under 300. Good day, man. Good morning to be a stock investor. You see Apple pulling back ahead of its earnings. Not super surprising, though. Piece of me kind of wishes I'd opened that short trade. Piece of me wishes I'd opened that short trade. It's just hard to short. I don't like shorting. That's the problem. But yesterday I said I wanted to open up a 3x short trade, and it was around here. I'd only be up 6%. It doesn't matter then. Netflix looking like a juicy buy, bro. Do I dare do analysis on Netflix? Because if I do it, it's going to convince me to buy it. No, that's not exciting. I'm not very interested in that. I guess it's the return off of the minus 2.94. Where are we at on the weekly though? Oh shit. Oh god. Hmm. Fuck, man. And we dipped into the fours as well. Netflix business model is so bad. It is. Don't get me wrong. It's not a great business, but I'll buy a bad business at a good discount. I'll buy a bad business at a good discount. Because it's not a long term hold. It's a cash grab. You know what I mean? I'm gonna leave it alone. It's tempting. The reason it's tempting is because it moves in threes, bro. Netflix has a huge history of moving in threes. Look at this. 1, 2, 3, pump. 1, 2, 3, pump. 1, 2, 3, pump. 1, 2, 3. What gets it there, though? That's the thing. What gets it there? I don't know. Didn't have a crazy good earnings report recently. Yeah. Missed on revenue, beat on EPS. I just don't know if it's a good enough discount. It's like if I saw Netflix down at like, I feel like maybe if I saw Netflix down in like the uber bearish zone, anywhere between 597 and 50, I'd probably buy it. Like if I got a Netflix in the 50s, I'd probably grab it for like a 6 to 12 month, 30% shoot. It's not a good enough. The more I'm thinking about it, it's not a good enough discount for me right now. It's too bad, but quote unquote bad. I mean, they're a good company, just I don't like it. It's not a good enough company for me for this level of a discount. I would need something a little bit more obvious. But you let me see like a Microsoft in this environment, bottom side extension zone, HCI at -4. Yeah, I do some wild stuff to get that. Nice. Service now taking a bit of a puller. Any ServiceNow folks out there? You know, this is a good sign for ServiceNow. The fact that it's holding so well at Golden Zone and it's gotten multiple bounces here doesn't mean that it's going to hold and it's going to bounce, but the odds definitely get higher and higher the more it spends time here because it's smashing sell pressure. You see all this sell pressure that was forcing ServiceNow's price down? That sell pressure has been getting absorbed like basically all year. And so what happens is it kind of springs up a little bit. And even if you do get one more pullback, that sell pressure can easily start to get mitigated and you get some sort of spring. I think ServiceNow at some point is going to spring out of nowhere. Like I think ServiceNow will probably end up giving you like a 20% move literally out of nowhere at some point. And it could look like this, you know what I mean? Like sell pressure, coil, capitulation, spring. Boom. And then next thing you know, I mean, that's much bigger than that. I mean, we're talking 100% on this, but you get the point. Like, I think even like a lot, like 30%, 40% spring for ServiceNow could definitely happen at some point. I could see that. I could see something like that happening because you've seen it before, right? Like we've seen it back here. You see how the sell pressure started to get absorbed right here. Then it went like boom, bang, right? You kind of see that, right? Boom. Maybe, you know, a boom or something like that. You know, I could see that. That's like God tier technical analysis, by the way. Like you just experienced a master at work. I mean, you've never seen a boom, bang, bang, right? That's TA, bro. Learn some. Yeah, we'll see. It does have a bit of interesting structure there, though. That's interesting. Let's see. Yeah. What about the weekly? Yeah. Yeah, maybe wouldn't be buying, but anyone who did scoop like sub 100, that's juicy. That's juicy. I like that. A lot of sell pressure in front of it, though. A lot of sell pressure in front of it. Going to be exciting. Not for me. Not one that I'm adding just because I don't really want to add it, but oh, Oracle, you're going to do it to me, aren't you? Oracle, you're going to do it to me, aren't you, you asshole? I literally said 2 days ago, I was like, I should open up that $100 punt on Oracle. I was like, I'll give it a little bit. Yeah. That would have been up 30%. 27%. You're going to do it to me, aren't you? Does Tyler have a video on his toolkit? No, I don't. Well, it depends. If you just go to the website, if you go to the website, I explained what it is here. Then I broke it down here, and then I actually put a video of like how I use it here. And then when you do sign up and you go to the Discord, there is also a like about welcome to the toolkit video and then a how to use it video. So there's a lot of content around it. Man, oh man, what a day. Well, look, folks, your boy has to jump. I got to go. Okay, I got to go. I have a meeting coming up here at 9:30. And it's 9:24. I have to jump. I got to roll out. I'm going to be live again in a few hours. Okay. I'm going to be live again in a few hours. There is a chance I end up making a YouTube video in a second here going specifically over AMD, Micron, and NVIDIA just so I log that, all right? So I'll let you guys know that'll go. But I know for certain I am going to be going live and later today. That's going to be at, let's see, my time. I think I set it for 2 p.m. So 2 p.m. my time, 3 p.m. Eastern. Okay. We're going to go through Amazon earnings, Apple earnings, listen in, talk about it, go through it all. We're going to go through everything. All right. So make sure you're there for that. I may end up posting a video between now and then on that. I've also been posting some shorts. You guys seem to like them, so I'll keep posting some shorts. I just posted 3 yesterday. A couple of things I want to let you know. I have 3 things I'll let you know before you. 4 things actually. 4 things I'll let you know before you go. Okay. Before you leave, I got 4 things for you. 1, please like the video. It really helps. Okay. 2, if you are someone who is trading, I have a link down below to Liquid. This is where I do all of my trading. I think you guys will really like it. And the coolest part about it is that if you use my link, you're going to get some cool bonuses and rewards. This is one of the best trading platforms in the world. Okay. Check that out. If you want the toolkit, this is the second thing. The link is down below. Go learn more. Watch this video. Third, something I didn't talk to you all about today. If you want more from me, if the live streams are great and the educational videos are great, but you want more from me, there's something down below called TH Capital. TH Capital is a course community. It's a monthly subscription. You pay anywhere from 20 to 30 bucks a month, and you get access to all of the courses that are currently live. There's 12 hours worth of courses. I'm releasing another 4 courses over the next 12 weeks. So we're going to have 8 total courses, and it's going to be about 20 to 24 hours of course content. There's live event replays, currently 3 hours, so 5 hours of live events you can go rewatch. That's all available there. There's also the Discord server, which is where you're going to see everything that I buy, everything that I sell. You're going to see my portfolios. You're going to join the community. You're going to get all this stuff. And that's also where I, of course, do the live seminars. It's all there. It's 20 to 30 bucks a month. Many people here have made their money back tenfold from some of the things that we've done here. All right. This is not because of us, but, look at some of these fellas like Gandalf, $2,000 gain. Look at this fella, man. DC fan forever, $292,000 gain. That's not because of what he learned in our community. He did that before us. But these are the sorts of people that you'll find there. Okay. That's the last thing I want you to check out. So I got a couple things for you. If you're trading, check out Liquid. If you want a toolkit, check out the toolkit. If you want to join us, check us out there. Okay. So I hope you guys did enjoy. Today's live stream. I'm going to be live again in a few hours. Stay tuned. Like the video. Can't wait to see you all in the next one. Bye, everybody.